Welcome to another video by Dale Wheatley, founder at theoptionshunter.com. Subscribe to our channel at the end of this video, and let's start your journey to financial freedom.
Good evening, everyone. It's 5:04 p.m. Monday, July 21st. Pretty interesting day today, if you're paying attention. First thing this morning, the market gapped up, as you know, and you would think the call options would also gap up. Not the case. Call options actually moved down before moving up again. So you had a good opportunity for that part of it. But then it topped out somewhere in here. I don't know what time it was, but 11 o'clock or something like that. And it started rolling over about 11:30. So had an opportunity in the put side as well as the call side. If you didn't catch the calls, then you could catch the puts. So I wish I could tell you, like I said before, well, that looks like it'll go for a day. You don't get that unless you see a higher time frame that has a really advanced pattern or the downside or the upside look that may last a day or two or three maybe. But most of the time you get some that just last during the day. So not that I want to be a day trader, but that's just the way the patterns appear. So that's the way it is. Nothing you can do about it. If you want to be a trader, that's what you have to be. But we will see. The Russell 2000, 222 puts, 2 cents, 0.02. That was today, 11:30. And then also, in the afternoon here, about 2 o'clock, stuff like that. But moved up to 76 cents. I don't know about you, but how many 2 cents are in 76 cents? 38. That 38 times your money, no matter how you slice it. So notice that if you're paying attention to the market, that is, that you start to get worried. Like see, things are not advancing like they should be. That's the way it was today, where you had that initial advance, right? That started to move things higher, and then it started to dissipate. You started to see a breakdown in the leading stocks and some of the ones that have been outperforming and stuff like that started to show a dissipation. So when you see that, that's a sign that the market will probably break down. When you add that to volatility, which is increasing, and we prefer to see the upside divergence, which is not really the case here, but it's still volatility did increase, and you had a near perfect pattern on the downside. So 38 times your money is hard to beat. I don't think you'd be worried anymore if you made 38 times your money. See what I'm saying? But you have to pay attention. You have to pay close attention to what's going on. Well, say, well, the market's looks like it's getting ready to roll over. Yeah, well, maybe it is. When you look at the kind of a pattern like this, we'll say the top on the pattern was almost at the same peak, and it was above the peak that was here. Well, technically lower. Yeah, so it had weakness in it. So 10-minute chart, yeah, definitely had weakness. So here's where the real catalyst came in, is when this was underneath the signal line and then bounced off the signal line and moved down. So from 230, 220, 230, around that area. So the 222 puts, it was only at 223. So the 222 was a shoe-in. You don't have to worry about too much. How much could you lose? Well, pattern says you wouldn't lose anything. Let's see. Here, 230. Let's see, right? 220, see, 230. Yeah, there's same 2 or 3 cents. Yeah, that's right. And they moved up to the same 70 something cents. Easy 20 to 30 times your money. Easy. And that's what gets you the money. And that's what happens when you pay attention. See, when it bottomed out first time at 2 cents, and then it moved up to 23 cents. Oh, that's good. But then it came crashing back down to the same amount that you paid for it originally. So that's no good. So you have to be paying attention to see whether or not the lift is still there or the push is still there to the downside. The lift on the volatility is still there. SPY, how about it? Is that weak enough? The price is the same on the 10-minute chart, 15-minute chart, whatever. Price is still the same, but I don't really see the kind of thing I want to see on the 15-minute chart. I don't see it, but the 10-minute chart I do. So price is the same, right? Same, not same on the indicator, not even close. It's undermining the price. So if you hang on to it, like at 631 over here, see what you get out of it. From a nickel to 70 cents, well over 1,000%. All happened late in the day today. Here's the 630 puts. Yeah, 222. One, and then they moved up to $1.67. So that's well over 2,000%. Yeah, right? From 8 cents to $1.64. That's 2,000%, right? 1,950. Well, 20 times your money. Still doesn't beat the Russell 2000. So Russell 2000 was the best one, but they were all good. Qs were pretty much the same thing. They had all good order to them. So you could feel it if you're paying attention to the market. It's like, why aren't these things advancing? The Nvidias and stuff like that. What's the problem with them? In Nvidia, it's like, well, why isn't it advancing? So at 220. See, Nvidia started breaking down. So you see that? So that was the same time the market started to break down. Makes sense, doesn't it? No sense in trading Nvidia. Microsoft doesn't have a pattern. Broadcom, Citibank, JP Morgan topped out about noon today. They're rolling over. But collectively, the weakness spilled into the market indexes. So that's all we're talking about. That's why it's easier to trade the indexes, and it has the extreme volume that we look for and the low bid-ask spread on the options. So that, in a nutshell, is everything we need to become rich very, very, very quickly. But you have to pay attention. Nothing I can do to make you pay attention. Just you have to just pay attention and know what you're looking for. See, I'm sitting back right now and looking at the chart, say, I know what I'm looking for. I just don't see it right here. See, but when I look at something else, I do see it. That's all that matters. That you see what you want to see, and you want to see it on something that has the volume to support what you want to do. You want to trade thousands of contracts or hundreds of contracts, no problem. With the low bid-ask spread, no problem. Everything you ever want was there today. Gold was up today, and it has options that expire today, Wednesday, and Friday. So take a look, see if it outperformed the Russell 2000. Not likely. See, from 10 cents to 60 cents, something like that. That's 6 times your money, not 38 times your money like the Russell 2000 was. And this has options that expire the same day. However, it doesn't have the low bid-ask spread, and it does not have the heavy volume that we see. So forget it. Get it. You wanted to buy the leveraged index, JNUG, JNU, 7.11% today, 711, huh? So 75 yesterday and 82 something today. So that was pretty good. But it also started to taper off. So same thing. You're looking at things and you want to garner the best profit you can get. So you take the profit right here at 1040, and that's it, whether you have options on it or not. Wouldn't you rather just make 38 times your money when you're dealing with something that's uncertain like that, and be done with it? I would 10 times rather be involved with the options on something, but not on the gold, on the Russell 2000, the SPY or QQQ. And that's it. Talk to you later. Have a nice night.